Hello guys, it's another trading day. This is the 4-hourly outlook. So we can see that as predicted yesterday, price came down to fill the 4-hourly imbalance. Now at this point, price is presently trading inside another imbalance that was formed yesterday. We are currently inside an internal range liquidity. And resting below here is sell side liquidity. And as we've learned, price moves from internal range to external range. That means that as we are nearing the next 4-hourly candles formation, we can be looking for an entry point for a sell setup. We can see that price has fully filled the gap here, but this over here is not an area that we can trade off on. So what we are going to do is to go down to the 15 minutes chart and then look for the corresponding premium area around that fair value gap high, and that is around this place. The series of consecutive candlesticks over here make up a bearish breaker block. When we extend this out in time, it is just corresponding to the fair value gap high we identified on the 4-hourly. If we want to pick a trade entry, what we are going to do is to find the midpoint of the consecutive candles, and that midpoint should be around 1.34628 or 627 thereabouts. So we can set a limit order around that level, expecting lower prices. So I'm going to draw this out in time as we are just tape reading. We are not taking any trades. I just want you to see what we would have done had it been that we were going to take any trades. So I'll set this at 630, which is just a round number. Yes, so that is where I'm expecting price to draw to before it reverses. In just about 6 minutes, we should be seeing the formation of the next 4-hourly candle. So from internal range, we expect to come down to external range, which is below this sell side liquidity over here. Okay. As you can see, price is presently trading at 34575. It's actively moving upwards. We are just about 5 minutes to the next 4-hourly candle opening. Let me explain this as well. Because we are using the series of consecutive bearish candles to frame the entry, it's the same that we are going to use to frame our exit. In that instance, what we are going to do is we are going to enter in around here, set our stop loss above our stop loss limit should be just above the candlestick's high. Right there. And we are taking profits below here. That should be around 44, 45 pips. Yes, approximately. But you get a drift. This is not approximate for the entry to exit, but should it be that this is what we are doing, we are even going to reduce our risk further, because the high of the consecutive candlesticks which form the bearish breaker block is at 1.34710. So we can set it at 720 just to allow for spread. It's 10 o'clock GMT and our candlestick is forming. As we mentioned earlier, we are just expecting it to draw up to this level here and then fall further down. Whatever happens, that is my expectation for this morning. I'm not actively trading live funds. I just had to show you what I would be expecting if I was trading. I'll pause the recording here and come back later to let you see how trade panned out. But 10 o'clock is the close of the London Open Killzone according to ICT. Today on the economic calendar, there is core PPI news at 1:30 GMT. So multiple high impact news releases over there. Let's go back to price action. I'll see you later. Thanks for tuning in.